when a stock breaks out of a channel, for example, and starts to trend, all right, it had 5 waves. So you had a first wave up, a second wave back, a big powerful wave 3 up, and then a 4 back, and then a 5, and then usually after the 5th wave, the trend was over. And the 5th wave, 99.9% of the times, goes above wave 3. So that's kind of the way it looks. And then what happens is that after the 5th wave, you get a change in trend. And so then it starts to move in the opposite direction, or you can get a consolidation and then a move in the opposite direction. But basically, that's the Elliott wave in a nutshell. Now, a couple things about the different wave structures. So the first wave up, all right, is one of the most difficult waves as traders to realize that there is a trend underway, because 80% of the time when they're down, when markets are down in these little clusters or channeling areas down in here, all right, any of the breakouts from these clusters, 80% of the time they fail and you go back in to the range. This is also called a range, the distance between the high and the low. Same thing when they break out, they usually retrace back in. And so this happens until the breakout really becomes one that is a trend. And so it's always difficult if you're trading this, because, you know, if you go in here and you get stopped out, you go in here and you get stopped out. And if it didn't break out here, instead comes back down, you get stopped out. So you literally could have a lot of stop outs, and that really, and then you throw the towel in, and then of course the next one does what? That's the real one. So that first wave becomes very, very difficult to catch. And what I like to do, I'm going to give you a little tip here of what I like to do with that, is that you kind of want to see that there's follow through. And on that first wave up out, all right, let it go, okay? And if you get when you get the pullback, and you will get it, all right, that pullback then is going to be a kind of take a look and see if it goes and stays back in the channel, or you get a move back up and you take out the high of the first wave. So ideally, okay, this is a nice area for your first buy-in because it has the highest probability of success. Now, one thing I'm going to also tell you about is that the higher the probability of the trade usually means the stop is going to be further away. The lower probability of the trade, the stop is going to be closer. All right, so when you get into a breakout situation, your stop, the best place for your stop is the low of the trend that eventually breaks out above the previous one. And so that's going to be your buy point, and your stop is going to be here. And then you adjust your trade size. And of course, we teach you how to do that with the trade size calculator, the risk reward calculator, and you're off to the races. So that is probably the greatest way to make sure you don't become a victim of one of the 80% false breakouts, for the lack of a better word, right? So that's one way of certainly doing it. And then that gets you in on wave 3, which is the most powerful wave until we get to the top of that. And then we have wave 4, which is a profit taking wave, and then wave 5, which completes the sequence. Now, we have a variety of different tools and a variety of different techniques to help us identify the end of wave 5 and even the approximate ending of wave 3. And of course, we do that by using Fibonacci's and their extensions and retracements. So when you have a, for example, I'm just going to erase this a moment, but when you have that first wave up and then that second wave back, all right, once wave 3 completes, we then go into wave 4. But how do you know when wave 3 completes, right? A couple ways, all right? One, we have an indicator called the owl. Is everybody kind of familiar with that? I'm sure most of you, I'm looking at the who's here, and I think most everybody either has it or knows about it. But when the owl goes from a green histogram on a wave 3 into a 4, it goes red, and it must go red for a wave 4. All right, they're minor little pullbacks in the waves, but they aren't major enough to create a red owl. So they're not really a major 4. They may be the subwaves inside the wave 3, and we're going to talk about that in a moment as well. So that's one way we know that we're in wave 4. The other way, is what I just mentioned, the subwaves. So inside these major impulsive waves, and what that means is these are the waves that move in the direction of the trend, whereas the corrective waves are these that move slightly against the trend. So when you see something developing, and your buy signal is going to be here, remember? So if you see this developing along, all right, there are waves inside these waves, and there are 5 of them, all right, just like the 5 waves in the larger or major trend, okay? And so again, when you get to the 5th wave, subwave, inside the major wave, then you're at the end of wave 3, and when that correlates with a red owl, all right, then you're most likely at that point entering 4 and probably already in it once the owl goes red. So that is a very good way of knowing wave 3 is over. But let's erase this here a little bit more and go over these subwaves a little bit. So there's wave 1, and here's a wave 2, and here is a wave 3, and here's a wave 4, and here's your final wave 5. So who can tell me what the impulsive waves are in that diagram? What numbers? Remember, the waves that move in the direction of the trend are the impulsive waves, correct? Okay, 1, 3, and 5, right? Good. All right, so I'm going to circle those, 1, 3, and 5. So if you are on, for example, a daily chart, and you want to more clearly see the structure inside those impulsive waves, you want to go down first to a 60-minute chart and see if you can see them, and then you can go down from there until they become apparent. And what you'll find is when you have these impulsive waves, they are all made up of 5 waves. So these are smaller ones, right? They look something like this. Of course, they may not be as neat as this. You may have a little congestion here, that type of thing, but you get the picture, okay? 5 waves. So again, if we just bought into wave 1, okay, buy here, then we know that this is the starting point for the new wave, right? So then we look for the wave 1, and that's probably how we got in. Then you'll have a pullback 2. And then you'll start to have a move up to 3, okay? And then a move back to 4. So if you're trading this big long wave here and you bought in here and you want to know where you think it's going to end here, well, you could take your fibs and put them on the smaller waves, and that's going to give you a target for wave 5 of the smaller waves, which will be the end of wave 3, which you're trading on the daily chart. All right, so by going to the lower time frames and applying your fib extensions on the wave structure in the lower time frames, you can achieve a target for the higher time frame. All right, we do this all the time, and it doesn't matter if you're position trading. The most likely chart you're going to be using for your major entries is the daily. So you're trying to catch the wave 3 on the daily, and then you would use like a 60-minute or maybe a little bit under that to see the waves inside that daily wave 3, and then apply your fibs to that for the target of wave 5, which is the end of wave 3 on the daily. And you could do this on any time frame. I mean, if you're day trading and your major time frame is a 5 minute, well, you can go to the 1 minute to look for the subwaves, that type of thing. So this is kind of a neat way to get an idea of a target range of when wave 3 is going to be over. And then if you use one of our indicators called the owl, all right, this is going to be very bullish. The owl will be the highest on the major wave 3. And then when it starts to get to the end of wave 3, you'll see a little bit of a pullback and then a retrace over into the negative area. So when you've hit your target here, you want to look for a decreasing owl here, and then go ahead and plan on exiting some of your positions at that point. And then when it's clearer that you're in a wave 3 with the final owl going red, you can exit the entire position and look to get back in on the beginning of wave 5, for example. Or if you don't mind holding it during the entire profit-taking move down, you could do that. Then when it starts to move back up again, you move your stop here, and then you move your stops very close like that. So the idea is that there are 5 waves, and you have to decide when you take the trade, basically, are you trading just that wave, that impulsive wave, or are you going to trade the entire trend all the way to wave 5? And I've done both, okay? And it depends on the market, it depends on how much profit I have and where I originally got in. Did I get in on a perfect clearing of wave 1? If so, I've got a lot of profit, so I probably want to go ahead and take that at the end of wave 3. All right, any questions on that? Hopefully you can follow that because it's a little tricky, but that is kind of the idea on how you trade that. And then when you get to wave 5 top over here, all right, the owl will be red during 4 and then start to perk up again to the bullish side on a bullish wave 5. But one of the differences between the 5th wave and the 3rd wave is that the 5th wave will not be, let's just say, as exciting as the 3rd wave. And what that means is the momentum, the volume will be lower on the 5th wave than it was on the 3rd wave. And when you use the owl, you can see the bearish divergence between wave 3 and wave 5. So the height on a bullish trend, the histogram will be green on the 3, go red on the 4, back to green on the 5, but the 5th wave will have a lower green owl than the 3rd wave. And that's called bearish divergence because prices will be higher than 3, but the owl will not. And that is a sure indication and actually a rule for you to have wave 5 to be confirmed. Okay, you have to have bearish divergence between wave 5 and wave 3. So that's kind of a couple little things that you can use, little tricks in your toolbox to use when you actually trade this market. Now, some people are very aggressive and they like to get in here. Once it, here's your breakout here. And so they usually wait for a slight move up, a pullback to keep above the channel and then go once again early. You can do that, but you have to have your stop at the bottom of the origination of wave 1 because these wave 2s can retrace 100% and form a double bottom. All right, and that's basically what a double bottom is. There's a couple different places for double bottoms and double tops, and I'll cover that in a minute too, but wave 2 is notorious for being a difficult wave to really figure out, are we going to do a double bottom or is it going to be a normal fib retracement and just go halfway and then go? Wave 4 is not like that, okay? Wave 4 will not retrace the entire move, but instead will retrace the Fibonacci retracement degrees. And wave 4 cannot go into the top of wave 1. So let me just erase this once again because we're getting a lot of lines on that one. And so let me put these back up here and we'll cover just a couple more things here. So here's your 1. And I could draw this on a downtrend as well, all right? So it applies for both uptrends and downtrends. So this is where on this wave 2, I'm just going to erase the 2 for a minute. This has the capacity to come down all the way to the bottom or starting point of wave 1. As long as it doesn't go below it, okay, can't do that, but as long as it doesn't go below it and move back up and then take out the high of 1, then those chances are you're now in wave 3. So wave 2s, and this will be your double bottom, 1 here and 1 here, okay, so for the 2 double bottoms. And then you're off to the races. Now, another thing that can form a double bottom, in this case we'll call it a double top, there's your 1, there's your 3, and then what happens is you get a correction. Corrections are usually A, B, C, all right? Now the B wave is kind of like a wave 2. It can come up and kiss the top of wave 3, and there's some complex corrections where the B wave can actually go above wave 3, but it's so rare and so limited that it very rarely happens. However, it can go up certainly high enough for the appearance of a double top. All right, so you can get a double bottom here on wave 1 and 2, right? But you can also get a double top on A and B. And likewise too, if you're talking about a downtrend, all right, where this is wave 1 going down, wave 2, wave 3, all right, and 5 like that, you could, here's your double top, okay? And likewise, you could have a double bottom here as it goes into wave 5, okay? So that type of thing. All right, so it's just a reverse of the trend. All right, let me just think of anything else I can tell you that will help you with that. If you have any questions, give me a holler. But that's kind of what we look for when we are trading the Elliott wave. So we use it as a roadmap of the markets. Now, another helpful thing with price structure that I use is when I see a trend in, let's say we have something like this going on, all right, no matter what the trend, whether this is a 1, 2, let's say this is a 3, this is your 4, and this is your 5, okay? So no matter what wave you're in impulsively, all right, it's obviously made up of price bars, right? So you can have a price bar here, comes up, pulls back, then you might get a real big one in the wave 3 section like that, pulls back, all right? But you may have to go to those lower time frames to see that, okay? So be aware of that. In any trend, all right, you're gonna get some price bars like this, and then you might get a resumption like this. And you don't always get this, but when you get an elongated price bar like right here, okay, take your fib, or not your fib, your risk to reward device, and take this, I'll show this to you in a minute, take the distance here and go 1 to 1, and usually this wave will end at the top of that 1 to 1. So it'll end here before it starts pulling back. So that can be a very helpful situation if you're thinking about taking profits, all right? You see a big price bar like that, maybe some consolidation, and then another breakout. Usually the next breakout ends on the same amount of distance on that bar, one bar, from the top of it to the end of it. So that's kind of something we use a lot in day trading when we're scalping the markets. So that's kind of a neat thing. Let's see what we can see here. So here's an example of using the fibs on GBTC, which just happens to be what I have up right now. And this is the ETF for Bitcoin. So on this here, all right, this structure here is all wave 3, all right, and the owl's helping us with the count here. So you have wave 3 there. And notice how direct it was. And then we go into the wave 4 sequence. Okay, we have a move down. Okay, still moving down. And now we're hoping we're going to be on a move up. That looks a little bit chaotic, doesn't it? So usually you get something nice and neat like that, but you have a little bit of a situation thrown in there. So it's probably a little bit more of a complex correction unfolding here, because it lasted a lot longer than than a quicker ABC. So it's probably more like an ABC, this is D. Let me rewrite that here, type of thing. This is a 3. So this is your A, B, C, D, and E. So, you know, and they can go on a little longer, but chances are we got a bottom in here, okay? And we may be in our 5 already, okay? This may be the first wave up on 5, the second, all right? And we're seeing a little bit of the wave structure, perhaps in wave 5. So 5 will end here, 1, 2, 3, 4, 5. And sometimes you can see the waves, the minor waves on the same chart you're trading for the primary chart. So it just depends on the wave structure and how pronounced it is. Okay, you don't always see it, but it looks like we can see it there. So that type of thing. So using fibs, you know, we anchor at certain anchoring points based on waves 2 and 3, and then 4, and they give us our target ranges. So that kind of thing. So we're very close to going green, which will be a helpful confirmation that we are probably in wave 5 at that particular point. We want to see a little more follow through and start taking out some of these tops. But these are the kinds of configurations you see on all markets and all time frames. Another thing for those that are using the art software, you will usually on a wave 3 see more than 4 or 5 pyramids, not unlikely, sometimes as many as 8, 10, and that is a sure indication that you're in a major impulsive wave 3. The wave 1s and 5s don't usually have that many pyramid, but notice also here how distinct the owl is with the price structure, okay? So that's usually a really good key. And then this 5th wave coming up here will have, once again, a green owl for a fairly significant duration of a time until the 5th wave ends. And then once that ends, you'll be able to draw bearish divergence. And as soon as it clears wave 3, it is a wave 5. And you just hold that into the target zone and wait for a change in momentum. Any questions on that? Any questions? All right, well, I like to keep these sessions to about 30 minutes. And I think this is a great topic. Thank you so much for bringing that up today. All right, I appreciate that. But that is an overview of the Elliott wave. If you like this, we have a course on our website that does a much deeper dive into all of this. And it is a course specifically on the Elliott wave. So just go to our website, go under education and courses, you'll see it there. And it's an excellent course, and we'll teach you how to draw the fibs and go into a lot more detail. All right, so I want to thank everybody for coming today. We're going to have this recording in the usual place. Don't forget, we put the recordings in our YouTube channel, so it will be there. And you have to gain access to those, to that private area on our YouTube channel by going into the client support area and then logging in with your VIP password, okay? All right, so everybody, have a great week. Jerry, thank you for the nice comment. Appreciate it. Great to have you here as well. And not only you, but the others here, great to have you here.
Love Jerry.
Again, any questions that you have, feel free to bring them here and ask. This is the kind of place that we like to basically make sure you're taken care of and we get all your questions answered. Sometimes, you know, when you go back and forth with emails, you can't really explain it like you can on a chart in person live like this. So if you have a question, write it down and then just bring it back. All right, so thank you so much, everybody. We will see you back here next Wednesday. Have a great week.